North Carolina families over 70 have a charitable tool that most of them are leaving on the table. It's the simplest one on the list. It doesn't require setting up a trust. And for most North Carolina families, it beats out itemizing. Here's the qualified charitable distribution playbook. Once you're 70 and a half or older, a qualified charitable distribution, or a QCD, can allow you to redirect over $100,000 in annual IRA distributions to a charity of your choosing. The distribution counts towards your required minimum distribution, but it doesn't get assessed to you as income on your return. It's the simplest charitable strategy in the tax code. If you're approaching 70 and a half years old, your next step is a conversation with our team. Click the link below. For many North Carolina retirees, QCDs beat out itemizing for their returns. For the last decade or so, most married couples have about $30,000 in annual standard deduction on their federal return. Because of that, most North Carolina retirees don't itemize on their tax returns. Qualified charitable distributions are the best of both worlds because it's a deduction that goes directly to the charity of your choosing, but it bypasses the itemization process on your taxes. It treats it as if you never realized the income at all. It also complies with your required minimum distributions. Over time, as you get older, the government requires you to take money out of your 401k or IRA to make sure that they have an opportunity to recover the taxes you've otherwise been deferring for your working career. The qualified charitable distributions allow you to take that RMD and place it right into the hands of a charity to totally bypass your taxable income. For a North Carolina retiree with $2 million in assets and a $75,000 RMD, who is going to give $30,000 to charity anyway, giving a qualified charitable distribution from their RMD is capable of reducing their taxable income by $30,000 directly. Now, a QCD must be from an IRA or a 401k that was rolled over. It must go from the custodian to the charity. It can't come into your hands first. It unfortunately cannot go to a donor-advised fund, a private foundation, or any other charitable mechanism. And you have to be at least 70 and a half years old and contribute no more than $105,000 through the QCD. Don't let your questions go unanswered. Click the link below for the answers to your questions. For families with assets at or over $10 million, a private foundation can make a lot more sense. It can foster family involvement in charitable giving over generations. It can allow for direct contributions from the foundation to charities, and it also allows for family employment within the foundation itself. In exchange, there's an administrative cost and compliance concerns between 0.5% and 1% every single year. It also requires that at least 5% of the foundation's principal be given in grants in any given year. Now, North Carolina families with $10 million or more will often find the best benefit in creating qualified charitable distributions, charitable remainder trusts, donor-advised funds, and family foundations together as a layered approach, not a one-size-fits-all proposition. We can use the charitable remainder trust for a large block of appreciated assets. We can use the donor-advised fund for discretionary giving with blocks or bunches of donations given at once. And we can use qualified charitable distributions at or over 70 and a half years old and to redirect the required minimum distributions from hitting our taxable income. The best charitable strategy isn't picking just one tool. It's using each one where it fits. If your family gives more than $25,000 per year in charitable giving and you haven't run that coordination analysis, that's the next call. Click the link below. Protecting your family requires more than just standard documents. Schedule your consultation with our team today.